Alrighty, Doc here from North America. Another fun-filled day. It's, I guess, a day past the holiday, and markets monies are pouring in again into the market, or at least in the stock market, that is. And we can see the Nasdaq is. Let's see, where's the Nasdaq now? Let me take a quick look at that. Oh, and let me sign in so I can see if there's any questions right from the start. Let's see, changing that, blah blah blah. Okay, no, nothing so far. Let's see. Don't see anybody on the chat line, so this is good. Well, no, actually, it could be bad, actually. But at least I did not miss anybody. So there we go. I can see the charts, and let's check my sound. Okay, there it is. So sound is good. So we'll get rolling along here. Um, let's see where are we at. All right, let's go to Swiss franc again. We usually like to start off with the Swiss franc. Let's put that up there. And there it is right there. You can see the Swiss. Now, they popped the Swiss yesterday. That's interesting. But did it make it into the buy or didn't it? Let me check the fact check spreadsheet. Because I rushed through it. Let me just double check. That'd be 21. Yeah, it did. So it made it back into the buy there. So let's put the line in there. And now it's going right back into the sell again. So some excitement. But it's in a weekly sell now for, just 1 week. So it went into the sell, went into the buy there, and it's flirting with the sell. And then, what do we have? We have a sell here. We went to a buy, and there is the sell there. No, wait a minute. What is that? That's a plus, and that's a plus. So it went back into a weekly buy. Do we have that on a weekly buy? Let's see. Let me just double check line 21. No, we have it still in the weekly sell. So how could that be? That seems to be wrong there. So what we have to do now is we have to put the buy back in there, like so. There we go. All right, and we have the line in there though, so that's good. There's the line. So it closed in a weekly buy and a daily buy, went into it, and now it's punishing us for it. Right there, you can see we're going down, so we're wrong. And you can see here that it's going right back into the sell also. Again, that strength we keep on expecting from the pairs and not the dollar seems to be happening slow and steady. But when you look overall, and you look at a lot of these charts, you can see that the all of them are functioning in a big long channel. Let's see if we can grab a hold of the mouse here and put a line in there like so. So I mean that seems to be the channel there, and that's the top of it, and there seems to be the bottom of it. And they've just been bouncing along there for the last 5 months. And I imagine again, money is trying to figure out what is the reality. Sometimes money is smart, sometimes it's not. It's trying to figure out, you know, is the dollar going to be strong? Is it going to be weak? What calamity could occur? So forth and so on. And so, looking for the direction of what the United States is going to do over the next few years. And obviously, that is stuck with the election situation. So now Arizona is calling for an assembly of the Senate and the Assembly House Representatives in Arizona to change the election result again. So everything seems to be aiming in that direction. Now I think there's going to be a Michigan one tomorrow, something like that. So Pennsylvania is drawing up the legislation to put Mr. Trump in as the winner, and now it sounds like Arizona is starting to do the same thing. So the media only reports the governorships. Hey, middle age, how you doing? Could you take a look at the West Texas crude daily and the 4-hour chart? Sure. A bull flag. Okay, let's check that out. Let's see where we at here. So first of all, let's go to right there. There is West Texas, and let's put it up there. There it is, right there. And so it's been a daily buy since here. Went into the weekly buy since there. I think Robin and I put something up in the bar chart about that yesterday. And then you can see it opened down today. Is that today? Yeah, I guess that's today. It opened down, and it does look like it's trying to lift up. We got a green dot going on there. Let's give it a refresh just to confirm that those signals are being confirmed. Yep, still looking that way. And then let's go over to, let's see, where's it at? Be right there. Let's go find was that a 4-hour chart? That is a 4-hour chart. Let's go to 4-hour chart. There's a 4-hour chart in gold. Let's put a 4-hour chart. Let me make a copy of this, just in case someone says, I want to see a 4-hour chart in gold. Let's see, copy. and then paste. And I guess it's time to move into different gold also with December. We moved the silver into March, so we must be getting close to moving the gold into a new contract also. We'll talk to Robin about that. And then here is crude oil. CL F. There we are. January oil. And this will fill in. Let's see what that does. Interesting. And you're saying you see, let's see, looks like a 4-day bull flag on the daily. Oh, on the daily. Let's go take a look at that daily real quick again while that's filling in. Yeah, I can see that right there. And that's the 1, 2, 3, 4. And we're finishing a 5, and more than likely it'll break out on the upside. That's what it looks like to me. Let's see, what do we have? Erasmus, please, is this webinar about stock or FX? It's about FX. It's about we do FX. We just did Swiss franc, and if you have a particular currency you want to see, we'll talk about it. We do currency for the first half hour, unless someone asks a question, and then we go to the question, and then when they're done the question, we go on to the next thing. If they ask another, then we stay there, and so forth. And then the next question, then we go back to the currencies. We look at the euro, we look at the cable, the British pound against the dollar. We look at we start off with the Swiss franc. We go to the euro. We go from the euro to the cable. We look at the Turkish lira against the dollar. We jump over to the Canadian. We go to the NASCAD. That's the New Zealand Canadian. And then we go into the commodities and we start to look at oil. I hope that helps you out there. And if you have a stock you want to look at, you can ask for a stock. If we can get it up on our chart, you'll see our math, expressing it. So there's no problem there either. We'll do all of that. And as you can see here, we're looking at, we were moving towards the euro. You can see the euro has been moving up there. We're answering a middle-aged muscle about a flag on a daily chart right here. Let's draw the lines there for it. And it looks like to me that it's going to break on the upside on that flag. And so it'll take out this high here of 46.26. It's not that far away. It's only $1 and change anyway. So, and you can see our work is trying to go flat here, and it's trying to turn up. So there's what's going on here. But I guess this is the best of all of it. Is the weekly is really starting to turn up in here. So we might get, we should get that other, trade all the way up into that area. Now let's go back to that 4-hour one that you asked about, and Erasmus. If you have a particular currency you'd like to see, just put it on the chat line and we'll go after it next. Okay, there it is. Let's widen this out. All right, there we are. And so there's the 4-hour, and it has that same look to it. I like how it did this correction thing, lifted up again, correction thing, lifted up again. And I'd imagine taking out these highs here could be the key to seeing this 46.26 again. You can see our work is trying to turn up in there. It broke down here right before the bigger break, I guess if you could call it that. It's not that big a break, but break down in there. And this one gave us the close there, and then it climbed for 12 hours. Wasn't the prettiest move. And then see, we broke down here, and then it was this one here, which is no good at all. It just bounced around again, and then didn't really go anywhere. It was a loser. And then we got one buy, and then it made a new high, and then dropped again. So it's a really tight flag going on in there. Let's see. Joshua, good morning to you, or afternoon or evening. So if you say that the exchange money should be mostly for traveling, is it better to trade indices and commodities? I suppose there is a hierarchy of acceptability trading instruments. I always tell everybody that I don't think anything is easy when it comes to trading. I think that all the products. I think what you always want is you want the most liquid product you can find. Also, it comes down to how long you're willing to hold on to a position, what gets you into the position. In other words, what technical analysis gets you into the position, will get you out of the position. It's a multitude of. We have rules around here, and we mentioned them. What the question or the statement you've made, answers a lot of those. So in other words, first part. So if you say that the exchange money should be mostly for traveling, it's not traveling. It's for companies buying different items from different countries. So if you're buying grains, you have to buy it in their denomination a lot of times. Sometimes you can buy it in dollars. But like Brazil is equal to the United States in soybean production. Imagine if you're buying soybeans and you buy it from Brazil, so you got to pay them in whatever they want to be paid in, be it dollars or Brazilian reals or whatever, that type of thing. Hey AR, how you doing? So, you know, currencies have more continuity in many ways. What I mean by continuity is they have a lot more consistency in trend. Uh, and they're very liquid. Equities, let's say bonds. Bonds are the most liquid product of all at times. I mean they're enormously traded, but the problem is that when there's a scare or a demand, it can move them out of whack really quick. Whereas currencies currencies have a little bit more continuity, a little bit more stability, but again, they're not listed on exchanges. So neither of those products, when they go, they really go. Like one moment you're trading bonds, and the next thing you know is they collapse, and they can collapse dramatically, and nothing will stop them from collapsing until the central banks stop it. In other words, whereas in stocks, it used to be that way too. Stocks are like further down the road when it comes to the caliber of trading. So I'd say bonds are one, on intraday and active trading. Currencies are two, same thing. And then it's West Texas, or it's oil and Brent, and then from there it goes it goes to stocks, or commodities, like corn, wheat, and soybean, and then stock indices, and then stocks. Stocks are really a very low active product when you really think about it, and the volume of it, and the dollar amount of it. They can trade $5 or $6 billion worth of bonds in a matter of minutes, and we can see where stocks, they could trade $5 or $6 billion worth of stocks all day long. You're looking for Bitcoin to come up. Oh, we can do Bitcoin right now. The way we work it around here is you just ask and you shall receive. It's kind of like the Bible. So let's take a look at Bitcoin. We're strong supporters of the cryptocurrencies. Let's find it right there. Cryptos are showing great continuity. We did slide into a sell for a couple of days. We've been in a buy in this product from here. Let's see where the line is. From there, we were on a daily buy here. We've been in a weekly buy since like back here somewhere. Let's see, what is that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks. I don't know where the line is, but we'll put it in there. Somewhere's back in here. We've been in a weekly buy, and on our spreadsheet we have it listed. Let's see if we can find the date. So this must be it right there. So that'd be 1, that would be 2, that'd be 3, 4, 5, 6, 7, 8. Nope, it's 2 back. So maybe it's there. Maybe there's a line there. Oh, there it is. There's a line. It's been in the buy since there. Okay, so remove that, and then when you go over to our fact check spreadsheet right here, the cryptos have been in a week. Oh, it's 11 weeks now on a buy, and 4 days in a sell. So let's fix that too. There we are. So it's been 11 weeks in a buy in our math, and then it went into a nice buy here. Finally broke into a sell here. Now we're flirting. Well, we're not flirting yet with it. Let's give it a refresh. But we're not flirting with the daily buy. It is up, but we're not getting a signal yet this needs to get through the 0 line. So this could be like an A, a B, and then maybe a C. Maybe they're going to take it down a little bit. But overall, the overall week-to-week trend in our math has been up. I hope that helps you out. The Bitcoin going up to 20. Yeah, it got up to 20, didn't it? Got right. Oh, yeah, there it is today. So it's 20,260. And now where's it trading at? Then it's trading right now at 19,765. So it's made a new all-time high. So that's pretty cool. Yeah, there's some walking around here talking about, and you see some of the banks too. They're also, and then Guggenheim, the fund, stepped up and bought a $500 million worth of Bitcoin, and so forth and so on. There's a strong feeling out there that we're going to see something wild, like over $100,000 for a Bitcoin. There's a the Citibank is saying 300,000. Some of the traders around here are talking about 100,000+, and there's a lot of action going on in the currencies. But I'm sorry, I call them currencies really. I think of Bitcoin like a currency. But there's a lot of action going on in the cryptos, and they're buying them, and more institutions are starting to, put a little position on, just in case they're wrong. They're managing billions of dollars. So what if they buy 200 million or 150 million, that type of thing. And there's options on it too, so they can hedge themselves. And there's future contracts on the Bitcoin. So that helps out the investors who put money into their funds to make them feel more comfortable. All right. Let's see. Now let me just check middle age. Was that enough for you? Middle age? Did you get what you were looking for? Or do you want us to go back and look at that a little bit more? And while you're figuring that out, I will go back to the currencies again. We'll go over to the euro. And there is the euro in our math. And we have it already up on J4X, you can see. And we left, what was that, the RSI in there yesterday. We left the RSI that we were talking about in there. And that's the green line. And so, you can see when my line breaks the RSI, it has a, and vice versa. When it breaks through the RSI on the upside, it's definitely a nice trade, isn't it? Now that one was interesting. It broke it down and then broke it up, and it didn't really work either way. And then it broke down. So, invert Taj Hat retired at 36 VP, 75% of asset to Bitcoin. I'm not really sure what that is. What is Taj Hat? Yeah, that was great. I'm looking to get long. Oh, I don't blame you there. Like I said, I think you could see. I'm just going to go back to that chart real quick, and then I'll go back to the Taj Hat. Yeah, I could see this thing try to take out these highs somewhere over the next 12 hours. I could see that happening. I think it, possibly even if they break that slope. Watch that slope right there. All right, now let's see what Taj Hat is. Taj Hat retired at 36 V put, 75% of assets in Bitcoin. Did they take profits? Is that what you're saying? A former hedge fund manager, okay, Raul Pal has invested heavily in Bitcoin. Yeah, it doesn't surprise me any. Again, the money is slowly aiming in that direction. This could be the year of the crypto. It's hard to say. Let's put it this way. The end of the year, people want to have that. Let me digress a little bit. Let me explain to you a simple thing. You may know it already, but I'm going to explain it for everybody, and that is that funds. Let's say they've like hedge funds or mutual funds or even pension funds. Let's say at the end of the year, or even at the end of the quarter, let's say they haven't been invested in something, but it's running hot. Okay. Whatever it is. It could be cryptocurrencies. It could be a stock. It could be anything. And so let's say they buy that product going into the last 6-7 days of the quarter. Or in this case, the last month of the year. Now it's on their books. Now what they do is they usually put out a brochure saying how well they've done for the year. Okay? And they'll say what's in their portfolio. Now this is where it gets really disingenuous as far as I'm concerned. what they do is they may go buy something that's done really well for the whole year and it's up, say 100% or 50% or 250%, who knows. Because they now have it in their portfolio, they put it in there as if they've had it for the last 12 months in their portfolio. So in other words, they tell the investors, well, we've owned Bitcoin. Bitcoin's up, 300%. But they may have not. They may have only been invested in it. Let's say they had a very small position, and now they've tripled the position, and they can say, the portfolio has 3% of Bitcoin in it now, and it's up 300% for the year. And everybody goes, wow, that's really cool because it's such a great winner. They must have done great. When in fact they missed most of the ride. But because of the way institutions do that, funds and fund managers and so forth, they pretend that they were invested in something that they weren't invested in. Hence why it's getting harder and harder to get 2 and 20 because they don't have the return that justifies what they're talking about half the time. So that doesn't surprise me that we're starting to see more and more. We saw in the end of the third quarter, we saw that some institutions had loaded up as much as I think it was $2 billion worth of cryptocurrencies. And now, Guggenheim came out, I guess it was Friday, and they bought something like $531 million worth of Bitcoin. So, they're stepping up and they're buying this stuff. I guess you could say I'm a former hedge fund manager. So I don't know who the name is. Manager Raw Powell. Let's see who that is. Let me see which fund that is. Raw Powell. Normally, really good hedge fund managers, you'll never know their name. Let's see. It's usually the ones that are trying to raise money that wants everybody's name. Let's see. Raw Powell's report. It's free. 2021 Best Investment Report. The world's best investment and opportunity. Raw Powell. Let's see. Has ever found. Raw Powell podcast. Meb Faber Show. Oh, okay. The Mark Faber Show. I like Mark. Raw Powell at Raw Twitter. Raw Powell, CEO, founder of Real Vision Group. I wonder and Global Macro. Cayman Islands professional profile. Let's see what that is. Let's take a look at that. Interesting. I think I've heard the name. I'm not really. I don't usually pay attention. Like I said, the best hedge fund managers, you'll never hear their name. So, let's see. What do we got there? There we go. All right. So, inverted middle age. Let's see. A former fund manager. Okay. Yep, Raul is a former Goldman. Oh God, at Goldman Sachs, is a salesman or was he a trader or what was he? That's those Goldman guys sometimes can be really bad. From a successful hedge fund management career at young 36. So then why are we seeing him now if he's retired? So he's not retired. He just changed companies, right? If you're retired, you go do something else. Go play golf, do physics. Go do something else. But he's still giving advice out, then he's not retired, right? Yeah. So. And what did he do for Goldman? Let's see if we can find out if he was a salesman or a trader. Probably was on a trade desk. Let's see. Let's Google him as Raw Powell and Goldman Sachs and see what he really was. We have last two governors of our state have been Goldman Sachs guys, and they're dumber than a bag of rocks. So let's see. That's the best way to describe them. They're dumber than a bag of rocks. Let's see. There it is. Well, Powell, Goldman Sachs. Let's see. Former Goldman Sachs exec. Now has 98% of his net worth in cryptos. Okay. Cayman Island professional, former Goldman Sachs exec. What did he do for Goldman? Former Goldman exec. What did he do for Goldman, though? Was he part of a trading desk? Was he salesman? He could have been a salesman. Who knows? Let's see. Suppose they call him as an exec. Let's see. Here we go. Prior to funding a macroeconomic and investment strategy research service in 2005. Oh, he's been around for a while. Okay. Co-manager of GLG Global Micro out of London. All right. Let's see. Oh, here we go. Worked at Goldman Sachs where he co-managed the European hedge fund sales business. Yeah, he was a salesman. He was selling hedge funds. Okay, sales business in equities and equity derivatives. Currently, he is the CEO of a finance. Yeah, so he's got a lot. He's got a deep book when it comes to that retail side. So after that, I mean, money is always running somewhere. After all, it isn't just a currency or even a store of value. It is an entire trust. I agree with him. I think that the cryptos are a combination of all of it. I agree with the way that statement of his. So, never really paid attention to the guy, but thank you for bringing him to the conversation. Nah, it sounds like he was a salesman more. It says that he was it says here that it says before that, Powell was worked at Goldman Sachs where he co-managed the European hedge fund sales business in equities and equity derivatives. He wasn't really a trader. He was a salesman. You like that lifestyle thing, huh? You think that's cool? All right. Like I said, the best of the best. You'll never know. All right. And oh, here we go. What's it say here? It says April 2020 GMI newsletter. Powell explained why he believes that a Bitcoin, which calls the future, could only one day have 10 trillion valuation. In that issue, Powell said that the idea of a 10 trillion valuation for Bitcoin is not so crazy. Okay. Well, he's a salesman. That makes sense. He was a salesman for Goldman. Now he's a salesman for himself. But it doesn't say anything about being a trader. So he's a big promoter of the crypto. I like the cryptos. I think he's right. I don't know if it's about 10 trillion, but I think it's growing. The level of liquidity. History to analysis. Okay, I'm just reading some of the stuff about him. Let's see. Daniel Carmen, editor at large, anchor. So, yeah, that's interesting. But he's not retired. He's got other businesses going. He left Goldman. That's all. Right before they were turned into a bank. So that's pretty cool. He took his money and ran. Because they don't get anywhere near the money they used to. He just became a salesman for himself. All right, and let's see what Bitcoin looks like on the crypto on the J4X. Where's Bitcoin? It's here. There's the currencies, and it's after the currencies. Soybeans. Maybe it's the end of purple. No. Bonds. There it is. There's the Bitcoin there. 18,667. Now the futures contract is carrying a premium. And what are they saying? They're saying Bitcoin is moving down. It's down 700 and some odd dollars on the thing there on the J4X. So that's cool. Like I said, it's always interesting. Right now, he is a CEO of a finance and business video channel. Okay, so which he has co-founded in 2014, and he has a newsletter. Well, he's a salesman. He's into that stuff. I mean, if he was a trader, he wouldn't do that. He would be doing that. I trade. I do the webinar. I do it all. Let's see. Man, oh, was with Man too. I used to be with Man. I used to clear through them. Global Asset Management Firm GLG Partners, which is now called Man GLG. Okay. Interesting. Yeah, imagine. It's a combination. I mean, they there's a buy side and a sell side in finance. In investing. So there's people who are involved in the buy side, and then there's people involved in the sell side, and then sometimes they try to cross over a little bit. He's the sell side, but if he's now a partner in a founder in a fund, then he becomes a crossover. So he has traders doing trading, and then he's the CEO, and then he goes out and sells the idea. In what cases? You know, well, in cases, what cases? Let me think. We might be asking there. In what cases? Well, in other words, he doesn't go in the morning and try to figure out what to buy or sell. His traders do that. And what he does is, he may have a overall since he's chairman of the company, he may have an overall philosophy. He may tell his traders, "I want you to trade cryptocurrencies, and I want you to trade, bonds, or I want you to trade stocks, or whatever." What did it say? It was equities and derivatives. So I mean, he could be trading futures. It said he was a salesman in equities and derivatives. So he could have been selling stocks. He could have been selling stock indices. He could have been selling, the stock indices are being sold through futures. Could have been doing it through options. The London market is strong in options traders, so that's good. But it doesn't really clarify there. So, but there's a buy side and there's a sell side. I'm always part of the buy side, and just our charting service now has moved into the sell side. Let me think. What am I trying to say? Oh, and then a lot of guys do the sell side of it. They look like they're traders, but they're not traders. They're salespeople, and they have traders doing the trading for them. Could you check the daily quant March silver? Yes, because Robin just had me change that over. I mean, you got to sell the stuff to get people to buy it, and that creates liquidity. It's not like it's bad. You have to understand, being a sales side is not bad. Someone's got to sell the stuff, right? I mean, you got to you got to go out there and, wow, look at that pop. Look at March silver today. Oh, it closed in a daily buy last night. Oh, look at that. And it's coming through. Look at this. We're getting some action here. Robin was just getting desperate. He's like, I don't know. Maybe I shouldn't buy any more. And I'm like, Robin, buy low, sell high. I was saying that to him last week. Buy more. Look at that. It's come back up to where, well beyond. I hope he did. I'll talk to him a little bit about that. So, yeah, there's the March silver. It's marching up. No pun intended. Marching up. Yeah, so sales. Oh, here we go. Hey, Josh. Yeah, there's nothing wrong with the sales side, because without the sales side, new equity doesn't come into the market. It doesn't help. It doesn't increase liquidity. So forth and so on. Now, obviously, due diligence and good quality choices are very important right along with that. And then there are funds that just do. I mean, there are people who do the buy side. They're choosing what to be long and what to be short and so forth, how to hedge it. So it's a commingle of all of it in the end result. But what he sounds like is he's more of a salesman, but he has a fund, so he's also in the buy side because they're buying, and then he's selling the fund to people, brings them more capital for them to buy. So it's a combination of both. And he probably has traders. And I imagine if you get his prospectus, it'll label who his traders are. The prospectus usually has the head trader in there. And it says he's a co-manager, so obviously he's, he may be the sales side of it. Yeah, because he even says there too, he was co-manager of his department at Goldman. Now he's a co-manager of, what's it say here? There it is right there. Let me show you what I'm looking at. You're not even seeing what I'm looking at. Let's see, where is it at here? It's interesting. I mean, we don't usually get into this conversation, so it's interesting. And to be able to describe how the system works. See, it says back in 2005, here it is there. Prior to funding macroeconomic and investment strategy research service, Global Macro Investment, right there, 2005, Powell Company co-managed the GLB Macro Fund in London for global asset management firm GLB Partners. Okay, so which is now called Man GLB, which I used to clear through Man years ago. Before that, Powell worked for Goldman Sachs as a co-manager of the European hedge fund. There it is here. Worked for the Goldman Sachs, where he co-managed the European hedge fund sales business in equities and equity derivatives. Now it says he's currently CEO of a finance and business video channel. So, but I don't see him retiring. It seems like he's involved in the game still. Let's see. AR says, okay, got it. Hey, Doc, you use media average in 50 and 200 day? Oh, the moving lines? No, we have our own. We do two things. On our J4X, let's get rid of that for a second here. On J4X here, we're following, we have the RSI in there right now. People were talking about the RSI yesterday, and we were experimenting with it. We'll leave it in there for a couple days, and I have it on one of my charts, too. So here's, we follow the white line and the dotted line here. They are a fast and slow-moving stochastic. When the fast stochastic breaks down and goes through the slow one, we think of it as bearish, and vice versa. We think of it as bullish. We look at the purple dashed lines, or CCI, kind of reflects the strength of it. That's the way we look at it. If it's breaking through with it, we think there's buying coming in. And we're using Hinky-Ashy candles on the bars. Now, that's a lagging indicator. And what it does is it simulates, let's just go to silver, since a middle-aged was talking about silver. So let's go to silver and look at it the same way. Here's silver. And so you can see here it's leaping up today, and it's starting to move with mine. Now you can see, whereas I was green here and green here now, see it right there, it's lagging a little bit. But it matches to my math and our proprietary Chicago quant stuff. You know, it does that. You know, so let's see. Where is it at? There we go. So it matches to our Chicago Quant Technologies. That's what we have. We have that website right there. And so that's what the math is here. And so what we did is we took J4X and we tried to make something that would emulate a lot of my math, you know, as best as it could. And you can see this, it's turning up. So when you're not watching the webinar, or you're not looking through Chicago Quant, and you go to J4X with Dukascopy, you know, you can emulate it, or you can try to emulate it on your own machines using these indicators there. 50-day, 200-day moving average. I don't usually pay attention to that, but you know, we could put it up there if you want to see how it correlates. They're more of a lagger, those moving averages, more than a leader. We kind of like to follow leading. Now, they do claim in many ways that stochastics are a lagger, but when you use them the way I use stochastics, they're a leading indicator, even more leading than RSI and ADX. So, but there's a lot of funds that follow the 50 and the 200 day. So at least it gives you a track when you're following those things. You know where money is what is money thinking to do when you see those things. You know, they support those lines usually. All right, let's see, where do we go from here? Did we satisfy you there, middle age, on the silver? And what we'll do is we're going to go over and we're going to take a look at the British pound real quick. And if anybody wants to see anything, just say, you know, we'll go look at another product. And what we do is we go through our rhythm, and sometimes we never make it through it because, you know, we stop and we do what everybody wants to look at, which is where my head's at. I like that. I like doing that. Now, where is cable? There it is right there. So you can see the cables playing with the top side of the range or resistance or whatever you want to call it. It's going into the sell for a couple of days, but it really hasn't fallen down. You can see we're in a weekly buy here for a while right there. Oh, you can't see that. Let's do this. There we go. See, we're in a weekly buy for a while here. You can see we were in a sell here in our work for the last few days. You can see it on our fact check spreadsheet at line 13 right there. 7 weeks in a buy and 2 days in a sell, and now we're on the third day there. Let's take a look at it through J4X. So you can see the characteristics of how our math and the J4X follow each other. So you can see there's a couple of red dots. Matter of fact, what's interesting is look at this. J4X is trying to throw some green in there today. Now, these lines are heading down still, just like it is, or how it was here, breaking the zero line here on our work. And now ours is starting to curve up, and we can see this, what is that? That's the, is that the RSI? I guess that's the RSI. And so you can see, but the stochastics are still heading down. So we'll see if that's another day of being sloppy on the sideways action, and they get some legs into the cable itself. Let's see, you have a huge knowledge and other questions. You are a trader or a sellman? I am a trader. I'm a buy side guy. But I have created a website to sell charts, and Robin runs that. And so I trade, and I'm a buy side guy. So we eat our own cooking. So I guess that's the best way to describe it. I am truly on the buy side. And so if, like, you know, you look at this as a newsletter, our Chicago Quant, it gets the advice of a buy side opinion more than a sell side of opinion, because we follow quantitative analysis, my proprietary quantitative analysis. So if you want to check it out, again, that's it right there. Chicago Quant Technologies. If you can see that. I don't even know if you can see it. There it is right there. There it is. So that's it right there. But the thing is, I'm here at Dukascopy every day, and you can see me live and talk to me live, ask me questions, you know, the whole gig. And matter of fact, we tell our clients at Chicago Quant to go to Dukascopy every day. We have a link to it, you know, to go to Dukascopy and come to the webinar and so forth. And then we use J4X to try to give traders, clients for Dukascopy an opportunity to be able to trade the markets a little bit better with a quant type of characteristic, using two different stochastics against each other versus the high and low of the stochastic. Well, over time you might, Josh. You just might, just keep on exploring. Pay attention to Dukascopy each day. It all comes down to what you want to trade and how you want to trade. There is no expediency when it comes to trading. Practice, train, get organized, get comfortable with your technical analysis. Know that your decision-making process, what makes you get into a trade, should make you get out of a trade. Don't change your mind in the middle of a trade, in the sense of, oh, I was following all the stuff I studied and worked on for the last 2 months, and now I'm in a trade, I'm losing money, and I'm going to change my mind. No, follow the rules that you've built. Oh, what's that, middle age? Yes, I appreciate it. For the silver, exactly. Yeah, I mean, that's exactly the way to look at it too. Wait for that weekly to close, if you can get into the options, that's great. Put a bull spread on. You could probably get away with the bull spread from yesterday's buy signal, but what you really want, most of that's been done already. Maybe in weakness you buy that again, but yeah, you don't want to have any hard delta, any real risk until it closes into that weekly. I agree with you. Let's see. AR says, is it difficult to be an analytic? Is it difficult? Analytic trader, or to do the analysis itself? Because Janos, the head technician the head analyst for Dukascopy, it talks about fundamentals versus technical analysis in trading. Well, if you do your work and you're honest with yourself and you work hard at it, and so here, let's give you an example. All right, let's give you an example. Here is the daily and weekly chart we're looking at right here. Okay, now we can go into something smaller. Let's go into something smaller. Here's a 4-hour one. Now, think of all these. Here's the chart. You have an indicator on the chart. You have green dots and red dots. It's my proprietary math. All right, now what you do is you take a product and you choose the time frame you're going to trade. You're going to trade intraday, you're going to trade daily, overnight. Figure out what you want to do. That's to start off with. All right, then from there, you start to back test different indicators. Like in this case here, you see where the indicator goes through the buy right here, and it has a tendency to go up with green dots at the same time. So when this is here, it says to you, okay, no matter how much it's squiggling, as long as it's staying above and, so forth and so on, and, it's showing those characteristics, you can be long. Okay? And then vice versa, or be short. And so what you do is you back test indicators, and you keep on back testing them and practicing all the time and following them. And when you get to a comfort level of success with them, then you paper trade them, or you're paper trading them already. And then when you get very comfortable, maybe you put some money to it. But you try to build, like I have one trader, he's been practicing for like 6 months now. He's getting close to putting money to trading, real money. But right now he's paper trading. And it's smarter to paper trade for a while first. Get your tools and your rules and ideas all connected together. And then when you feel comfortable with the rules and the tools, and you feel very comfortable about following your system all the time, then you put, as long as you're successful with your paper trading, then you put money to it. And so it's like anything else. It takes work. If you think that you can go into trading and get a lot of free money doing nothing, you're making a big mistake. I hope that explains it. That's a rudimentary level of understanding how to become a trader. Now remember, there's a lot of people who write books about trading. Okay? But the problem is that a lot of those people who write books don't really tell you if they were reactive or proactive. Okay? Now, you say, okay, now what's Doc talking about? I just started to understand him. Now what's he talking about? Well, reactive means is that they're working a trading desk, or they're working on a trading floor, and orders are coming at them. Proactive is this part of the era of finance where the trading floors are almost non-existent. The trading desks are almost non-existent. And so now people who work in this era are proactive. They have to come up with ideas, and then they implement those ideas. They don't have public orders or institutional orders coming at them, and they're trading buying it on the bid and selling it on the offer to somebody else. Now it's a whole different game. Okay, so a lot of books have been written over the years that were reactive traders who made a lot of money. Like before 2008, there was more reactive traders still. Before, after 2008, pretty much most of them are now proactive traders. So you just got to be careful about the books, because sometimes, now William O'Neill is a perfect example. Is that what you're talking about? O'Neill, Orange Book, Technical Analysis, right. Between him and John Murphy, great tools. Great tools. Exactly. William O'Neill is the one that created Investors Business Daily, IBD. And he was a buy-side guy who opened a newspaper and brought more financial news to the marketplace. And when nobody else was opening newspapers anymore and they were all going out of business. and it's survived very well now. Now it's more of an electronic site, but I think they print once a week now, and it's a great, website. You know, they have their own fundamental system. They have two different ratings, like relative strength and something else. They have it's a really good service. I watched Very Trader, but the majority are fake. I read a book about traders and said that the best way to do a strategy and have objectives. Yeah, a lot of them have written books, and they may be from the old days of reactive, and they're telling you how much money they made and how great they're doing and blah blah blah, and then you think that you're going to read their book and be able to do the same thing and be reactive, but you can't be reactive because reactive trading is almost non-existent anymore. Now it's all proactive, where you have to come up with an idea and go out there and do it. That's what we do here, is we describe the proactive universe. And so, React, that's what my website does. It caters to the proactive side. Dukascopy's J4X caters to the proactive side. In other words, you're not a desk trader, you're not a floor trader. Both of those things are almost non-existent. There's some reactive traders working for the brokers, trying to fill orders and adjust things, but that's about it. So always look to see what they did. When you read a book, look to see, notice was it UAR who told me about this, what was his name again? Rob Paul or something like that? Yeah. Was it you that started talking about that? Who was it that started me on looking who he was? Let me see. I'm going to go back and look. Yeah, it was you. Okay. See, what did I first do? The first thing I did. Hey, Robin. The first thing I did was I went to see what he did. Was he buy side? Was he sell side? As far as I can tell, he was sell side. Now, was he connected to the buy side? Sure. He was selling what they buy. So to me, and notice that last part that I described, where it says prior to Goldman Sachs, after he left Goldman Sachs in 2005, it says, you said he retired. He didn't retire. He just started his own operation. So he left Goldman Sachs in 2005 and started a GLG Global Macro Fund in London for a global asset manager firm. For a firm. He didn't start it on his own, for a global asset management firm of GLG Partners. So he basically became a salesman again, but this time he was doing it instead of for Goldman, he was doing it for GLG Partners, which got bought out by Man. This is called Man GLG. And now, what's it say he's doing? He's doing some type of sales newsletter. He's doing a newsletter. So he's selling again. And also he has obviously some buy-side people telling him what to buy. And it doesn't mean that he might not be a buy-side guy, but there's all the evidence there that he's more of a sell-side guy. And so he was more of that. And so if you read these people, anybody you read, understand where they're coming from and what their ideas are. And that is better. This way you can take the stuff they write and understand it better. See what I'm saying there? And then that's how you'll learn from them more. Because if you understand that he's a sales side or sell side, then you'll understand that, that's where his head's at. And so then you have to say, okay, where's his buy side recommendations? Who's giving him his buy side recommendations? Like I said, chances are, the best of the best in the buy side, you don't usually see them. They're usually doing their thing. And we need those sales side guys. Without them, we can't function. You need it all. You need it all. That's what stonework was supposed to be. Yep. All right. Where are they? Let's see. Now, let's take a look at it. Let's see, where are we at here? Let's go to Turkish lira. Unless anybody wants to see anything particular, we'll go right over to Turkish lira now. And there's Turkish lira. You can see it's trying to bounce back up. We're still in that weekly buy now for 52 weeks. When you go over to our spreadsheet, it's line 17. So you can see it there. 2 days in a sell, 52 weeks in a buy. My God, what a crazy world that is, huh? So, the Turkish lira, you can see it went into the sell here. It went down one day. Now it's climbing back up again. It's got a red dot. Let's refresh that. And we're not going after the weekly yet. Maybe soon. Well, look how close that is, trying to get back into the buy. AR, no problem. That's why we do the webinar. It's fun and it's educational, and it gives me. I've been doing it for a lot of years, and I love talking about the markets. And I don't have a trading floor. I was a member of almost every exchange floor, and I miss those days of just talking about the markets. I loved talking about the markets when I was trading on the floor, and ideas, and you learn things from talking about this stuff. I learn things. Everybody learns things. I miss those days. I call this the electronic pit. That's what I really think of the webinar. It's my electronic pit. I always used to say that. It's the electronic trading pit. Middle-aged Muscle says, I used to follow that guy on Twitter to see what he had to say. After a short period of time, I stopped following him. Oh, is that Paul? It sounded like, yeah, I have a question. What is the difference? What is the different liquidity with solvency? Well, liquidity, in a sense, when I'm talking about liquidity, I'm talking about products. In other words, like West Texas Intermediate, Brent North Sea Oil. They're very liquid in volume. Volume, I'm talking about. Ooh, I heard my phone. Where's my phone? Was that my phone? I think it was, maybe. So, that's what I'm talking about. I'm talking about that stuff. Solvency sounds more like an accounting thing. Where you're looking at a company and they are liquid with cash, so they're solvent. And when they're not liquid anymore with cash and sales, they're not solvent. That's more like a fundamental thing. Oh, okay, yeah. So you followed his technical analysis for a little while. Was it technical analysis or just general tweets on what is he doing, like stocks, and was he talking options at all? Indexes? Sounds like he was part of the equity side more. But then when they say derivatives, that could be a code word for, like commodities too. Because, they say derivatives, so I'm not sure if they mean futures contracts as derivatives or options as derivatives. And God, it could be even weirder things like convertible bonds. I think they consider them derivatives too on some level. Anything's possible when it comes. They throw that derivative at the wall like throwing spaghetti at the wall. In general, okay, yeah, okay. So, here, I try to be a trading pit here. I'm like the old guy standing on the edge of the trading pit, looking for something to cherry pick, and the young traders come over and talk to me because I've been around too damn long. Those days are gone. We used to have guys like that. Matter of fact, we had this one guy over in, where was it? It was in, he used to follow, I want to say Bristol Myers and Budweiser. He used to follow Budweiser, the beer company, and Bristol Myers, the pharmaceutical. He used to wear a suit every day. A snappy suit. He must have been 85 or 90 years old. He was like 85 years old, really old. And he was a runner on the New York floor during the crash of 1929. He was not a member at that point. He was a young kid. He was 16 years old. And, he'd tell us stories about the markets. And when I became a member at the NYSE, I was already understood the attitude of the people there because he had given me an idea of what it was like, what they were like altogether, just in general. But he had been around that long. He would just stand there for a couple hours in the back of the trading pit every day. And what we did is we felt so, he was so old and we respected him so much, we got him a chair, one of those like a bar stool. And he'd be up against the wall of the trading pit right there. And he would just sit there and watch the tape. And I did that for like 2 hours every day, As a trader, old traders, like I talk to a lot of old traders now, and, they don't have anywhere to go. They're confused, some of them are confused by the electronic market. Some are using it, you know. To me, I thought we need an electronic trading pit, a webinar where we can talk to everybody and they can talk back or at least chat back and throw out ideas and challenge me. That's what trading pits were like. You said something, they found a way to try to twist it around and break it on you. It was a real challenge. I loved it. Yeah, it's a combination always. You got to be careful. Oh, well, I'm getting a compliment. I gotta say thank you for the compliment. Middle Age says your stuff is the real deal. Yeah, it is. Yeah, what does Robin call it? The Swiss Army knife. Let me show you that. Robin put something up on the website. I love it. I think it's brilliant. Let me see if I can find it. Where is it at? I'll find it in a second. What's he call it? He calls it the. See if I can get my mouse to work right. Where's it at? I'm gonna end it with that. There it is, right there. There it is. I'm gonna show it to you. There it is. Quantitative trading is the Swiss Army knife of market analysis. That's a mouthful of words, but it's true. It's cool. It really is cool. I love that. Quantitative trading is the Swiss Army knife of market analysis. We did that with the Swiss thing too. In some ways, we thought about it. I remember saying, "Oh, that fits Dukascopy perfectly," because they're a subsidiary of Swiss Bank. I thought that was great. So, no, I have a couple graduate credits in there, but not a PhD. I deviated off. They legalized listed options. I have 6 graduate credits, and then I split. The way I got my name Doc was I was doing my trading analysis all the time, and something happened really wild on the Dow Jones. And I said to everybody on the trading floor at one particular exchange, because they knew I followed the Dow all the time. Back then, that was the only index to follow. There were, you had the S&P, but they weren't stock. There weren't futures back then. There was just they were indexes. The only futures were on like commodities, and so how did it work? My analysis, my work was showing me that we got into a weekly buy on the Dow Jones. And I said, this could go on for 7 or 8 days, this move. And people were like, how can you tell? And I said, because my math is saying that it wants to go up now. And so the Dow went up like, I don't know, it was crazy. It was, the Dow back then was trading at, say, I don't know, 900 or something like that. And it ran to like, it ran like 25%, it ran to over 1,000. And everybody was like, how could you do that? How could you predict it that way? And I said, I just follow my math. And so one day I walked onto the trading floor, and one of the big funds there, one of the big institutions that was a specialist unit, said, hey, Doc, come here. And I said, what's up? And he goes, you're the doctor of the Dow now. And I said, what do you mean I'm the doctor of the Dow? He says, you're the doctor of the Dow. You know what's going on with the Dow. I was okay. And then people would call me Doc. And everybody started calling me Doc. I was like, okay. So, no, I only have 6 graduate credits in physics. So, no, I deviated off when they started in the 70s, and I jumped out of the school and went over to the derivatives and got involved in the exchanges. So I've been a member of the American Exchange, the New York Stock Exchange, the Philadelphia Stock Exchange, and, like the currency exchanges. I forget where I left off there. Anyway, Chicago Mercantile Exchange, the Commodities Exchange Corporation, the IMF at the CME, the Currency Exchange at the Philadelphia, which was a separate one, which is now owned by the CBOE. I had access to the CBOT because I had a clerk's badge and I had a trader over there. And so I've been a member of pretty much, from the New York, all the equity exchanges, and pretty much all the commodities exchanges. I did all of them because I was an option guy. So to me, it didn't really matter what I was trading as long as it had options. Oh, I got to run. All right, I'm out of here. This is Doc from North America. I got to come up with a title for this thing. Happy trails to you until we meet again, which will be tomorrow, which will be Happy to Hump Day. Happy trails to you, to all my trading friends.